please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
$85.90 points higher, now climbing. 10,310 is taken. The Sensex is up 260.
There is nowhere in the market globally, in markets globally, that I see a bubble or I see irrational valuations.
We have exposure in Sterling Biotech, Sterling Port, and also global.
25 to 30,000 farmers have walked all the way from Nasik to reach Azad Maidan here, protesting and demanding their rights.
The market is about 15 points away from the day's high. 10,356 was the high point. We're at about 10,342.
The 200-point rally tomorrow morning. It will be interesting to see what kind of gap we get, up or down. And that, I think, we'll take it from there. For today, of course, this was just a massive, powerful move.
Bulls start Monday on a strong footing. Dalal Street sees the biggest single-day gain in nearly 2 years. Nifty ends almost 2% in the green. Sensex shoots up 600.
Strong US jobs data which came out last Friday has brought great cheer to global markets. Equities rally across Asia and Europe as well.
A subdued day for the broader markets. Midcaps recover from initial lows to end 1% in the green, although they underperform the blue chips.
PSU banks refuse to join the party. The index closes about 0.5% in the red, but of course off the day's low. The Nifty bank ends the day in green as private banks lend support.
ITC and United Spirits see an uptick in trade as the GST Council makes no mention of cigarettes or extra neutral alcohol tax in its meeting on Saturday. Well, those were the top 5 headlines from what was a hectic trading day in the bourses today. Hello and welcome to Markets Today Talk Back, the show where we tell you about all this 8 hours of exciting trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. A strong day for bulls, bears in hiding, and let's hope we have many more days like this one. Okay, maybe asking for too much. Over the next 30 minutes, we will be discussing the top 5 market stories of the day. Our experts will answer your stock questions. And today we have Deepan Mehta, member BSE NSE, and on the charts Ashwini Gujral with us. Gentlemen, thanks very much, both of you, for being with us here. Let's first wrap up the day's events. And, to make sense of what happened today, you have to rewind back to last Friday, essentially, when US markets opened and that blockbuster jobs number came out.
Absolutely. 313,000 jobs created in what is actually a truncated month. I mean, February. 10% fewer working days than the previous. On an average, when US creates 250,000 jobs a month, they are just about keeping the pace of growth at 2.5%. This 313 is quite clearly an extraordinary performance and spurred, of course, Wall Street, Dow Jones, 400 points higher. Nasdaq, new highs, Asia followed suit. Problem in India is we have been underperforming. We've been playing dog even when the global markets were doing well. Decoupling is the word. But on Friday itself, we seem to find support at that 10,130-40 levels, which is the 200-day moving average. So for the moment, it looked like we were poised to rebound and how we did. With this 610-point rally on the Sensex. Almost all sectors participated. Banks played laggards, but even they participated with some resounding fervor in the last hour, especially the private banks. Public sector banks at least cut their losses. But important point is how far can this go? 10,600 is seen by many as the barrier, but we will have to wait and see. Individually, what's your view?
I mean, FMCG, energy, metals really were some of the top performing sectors. But I mean, it was a day, except maybe a PSU bank index, which ended the day lower. I mean, everything else was in the green. So that kind of a day. The 3 indices, top gainers, infrastructure, private banks, autos. And I'm just talking about sectors here. And sectors are up between 1.5% to about 3% each. Even the public sector bank index, which was down almost 3% or so at one point, ended down less than 0.5% lower. Large caps, ITC, Bharti, NTPC, really going strong. Then you had IOC, Tata Motors, Hero MotoCorp. I counted some 22 Nifty names which were which basically were up more than 2%. Extremely strong. You had big gains in stuff like, the ADG pack, for example, beaten down quite a bit. Reliance Capital, infrastructure, United Spirits was strong from the word go. Then you had names like Adani Enterprises, Mastech, there was KRBL. I could go on. Long list of what has been a pretty good day.
Okay. Well, the million-dollar question will be, is this spunk enough to reach to new highs, or will this flounder? Will there be, is this just flattering to deceive? Some opinion here from Shankar Sharma, the co-founder and chief global strategist of First Global. We'll listen in and come back with our technical experts.
I don't think there is any bear market in Indian equities, nor is there a bear market in global equities. We kind of forget that markets don't have to just keep going up perennially or even for 6 or 8 months. We will have sharp cutbacks. And then it's just one of those things. There is nowhere in the market globally, in markets globally, that I see a bubble or I see irrational valuations. S&P is like 15, 17 times earnings forward. Bear markets don't start when you're looking at those kinds of valuations. You're going to see a huge bull market in emerging markets. It's just the beginning of a resurgence of a bull market. If you go back in time, EMs have been actually trailing the global markets let's say, from 2010 onwards. I think that trend is reversing. And I think that's because of the commodity bull market and the weakness in the dollar. These two factors will drive emerging markets significantly higher.
All right. So that is the big macro top-down view of Shankar remains very bullish. Deepan and Ashwini are with us, so let's get your thoughts as well. Ashwini, first to you. Can we, after a close like what we saw today, what could be the day tomorrow like?
See, first of all, let's not get overexcited because the US made a new high and we have just bounced back from a 10% correction. So let's not mistake this as big participation in the global moves. This is just kind of catch up. Now, broadly 11,000 to about 10,200. So 50% of that is about 10,600. So till that point, it remains a pullback. And only post that you would think that a fresh move may have started. But overall, forget about tomorrow. This entire year is likely to be range bound. So you will keep getting these bouts of 10,100 to about 11,000 and then back again, because I think commodity producers are going to do much better. That way, I think there could be a bit more to go, maybe 100, 150 points on the Nifty till 10,600. Bank Nifty could have some more catch up till about 24,800, 25,000. But at higher levels, there always will be trouble, and Midcaps will not participate very strongly.
Okay. Thanks for that, Ashwini. Deepan, you any shopping doing at this time?
No, I think today was a bit of a spectacular move, and maybe towards the end of the day, it didn't make sense to get into stocks. I think I've been saying all through the last week that a correction that investors should look at increasing their exposure to equities. And maybe even if they missed out on today, they will get opportunities over the next few days, because there will be corrections at some point of time. And one doesn't really know whether this bottom is a confirmed bottom and markets really have turned from here. But I think the overall strategy of buying at declines has proved to be profitable, and I think going forward also it will prove to be very beneficial to investors. So I think at corrections, I think get into blue chip stocks. Don't think that the long-term bull market has any major threats at this point of time.
Fair point. Okay, that's the technical and the fundamental view. We'll proceed to the second headline from the markets today. It was the US jobs data that brought cheer to global managers, global fund managers, as the indices managed to, as the job indices managed to add over 300,000 jobs in February. Global equities across US and Europe rallied on the back of this news. So did Asian markets, which saw a monster rally in trade today. Let's listen in to Mark Matthews of Bank Julius Baer on the strength shown in the US economy and how the Fed may factor this data in.
Yes, we do expect a rate hike in March, and we do now think it's increasingly probable that we'll be getting 4 instead of 3 rate hikes this year on the back of the sustained robustness in the economy and the tax cuts.
Okay, we move on to the third story of the day. It was a subdued day for broader markets. Although the index recovered from the lows, it underperformed the key indices, the Sensex and the Nifty, to close exactly 1% in the green. PFC, Bhushan Steel, recorded big losses. Both stocks ended the day over 4% in the red. Let's actually take some questions on the same now. We've got Twitter user Abhinav Prasoon, who has sent us a question. He wants to know, between PFC and Motherson Sumi, which stock should he pick for a target of 20% return within the next 3 to 4 months? I think, knowing Ashwini, we could answer this for him.
Yes.
But why don't we put it to him? Ashwini?
The question is?
Between PFC and REC, which one should he pick for a 20% return over the next 3 to 4 months?
I can see Motherson Sumi.
Yeah. Between PFC and Motherson Sumi, not REC.
Sorry,
so
I
that's
said...
that's why I was wondering, I mean, why this comparison? But that's the gentleman's comparison.
Sorry, did I say REC? Sorry. Motherson. I said Motherson the first time. Yeah. Go on, Ashwini, sorry.
Well, it's a no-brainer. One is a horse and one is a donkey. So, obviously, Motherson Sumi is the better stock. And global markets are doing well. And, you know, chances are Motherson will participate in that global move also.
Okay, fair point. I think this is a sitting duck of a question. The next one is coming from Vivek Singhania. He has a question on Bhushan Steel. Purchased 10,000 shares at 51 rupees a piece. Wants to know if he should buy more shares after the current fall. Deepan, you want to take a jab at this?
No, I think there's no point in buying more shares of Bhushan Steel. If you want to play the steel sector, then there are better options. I think even Tata Steel may give higher returns than Bhushan Steel, and there's JSW. But the top pick within the steel industry remains Jindal Steel and Power, and they have a massive expansion which is going on stream. And I think after many quarters, one could see the company actually turning black at the bottom line level, and then perhaps build on that as well. So our top pick in the steel sector remains JSPL, which is a bit of a turnaround story, and may have a better chance of giving appreciation than Bhushan Steel.
Fair point. Thanks for that. Gentlemen, do stay on. We have to take a break. But don't you go anywhere. We're going to answer lots more questions of yours and give you more data on how the markets performed today in a minute after this break.
Welcome back. You're with us here on Markets Today Talk Back. It's been a very strong rebound with the rest of the world that we've seen in today's trading session. We've been getting you the top market stories of the day. Of course, we have Deepan Mehta and Ashwini Gujral running you through the questions you've been sending us. Let's get to the fourth headline. PSU banks remain the underperformer amidst a market-wide rally. The index ended almost 0.5% in the red, but the Nifty bank was ended the day in green as it received support from the private banks. All the major private banks like ICICI, Kotak and IndusInd were up close to 2% in the green. I mean, this is some reprieve, Lata, right? I mean, after so many days of correction, PSU banks also recovering from the lows.
Recovering from the lows, but still many of them are close to their, historic lows. Yes. Andhra Bank is close to 15 yellow. It went to a 15 yellow. UCO Bank went to 11 yellow. Union 12 yellow. And even the others, if they break the current 2-year low, then they're all at layman lows or even lower than...
Forget the smaller ones. I mean, even take SBI, BOB, PNB, Bank of India. I mean, those four are...
More so PNB, BOI. SBI would still not be that bad. But the reason obviously is that the last circular coming in from the Reserve Bank exactly 1 month ago is forcing them to just recognize all their standard stressed loans as NPAs. I mean, it'll more or less lead to that. But you know what? In spite of all these rather large increases in NPA numbers, Axis, ICICI, as you pointed out, all of them ended in the green. The point is, this number is old news. It's 1 month old. So people have digested that. The reason why PSU banks, I think, are unable to, get over that hump is because of the later rule that the government did, that it wants them to check all the banks with over 50 crore NPAs or NPAs of over 50 crore for any fraudulent traces. Now, that means forensic audit. That means another witch hunt. separately, of course, there is also a shortage of capital for growth. Equally, for both reasons, I think it's the PSBs that will take longer because there is an uncertainty. How much is the downside? How much will the witch hunt be? And, the ability to grow therefrom is the question. In a way, it can affect actually the entire market. It can affect the infrastructure sector. It can affect lending generally. But let's listen to Shankar Sharma again. An excellent take on what we should not do to the PSU's bank space. Listen in.
PSU banks are problematic. We all know that. But the real problem, in my view, is happening post the Nirav Modi scam. We don't have credit growth. Companies, on the one hand, are scared to expand. Banks, on the other hand, are scared to lend. And this whole turning the screws on every loan above 50 crores to be scrutinized by some investigative agency, etc. I mean, government might have some logic for doing that, but my view is only that the behavior of bankers will then will turn contrary to what you really want to do, which is that you have to encourage some degree of risk-taking to rekindle the animal spirits in India.
Okay, we got a question coming in on Bank of India. Twitter user Jeetu Vijay Kumar has a question on Bank of India. He says he's bought 700 shares of Bank of India at 127 rupees a share. Wants to know whether he should hold or sell. Deepan, this is coming your way. Bank of India?
No, I think you should sell off Bank of India, and clearly I think PSU banks have a structural problem on their hands, and one doesn't really have a handle on their NPAs, and this earnings season could be quite ugly for PSU banks, and they could drift even lower from these levels. So I'm not saying that you should sell tomorrow itself, but look for exit opportunities in Bank of India. You're better off in a private sector banks, maybe say a Kotak or HDFC or even IndusInd Bank. Over a longer term period, 3 to 5 years, may give a significantly higher return than Bank of India. So my advice is to get out of all PSU stocks, Bank of India included.
In 2001, when I was covering the Ketan Parekh scam, on one day, Bank of India went to 9 rupees when it was discovered that they had lent some money to Ketan Parekh. But thereafter, the spring in the step that it got was like unbelievable. And after all, and after that, we know that although it took many years, it soared. But anyway, the point is, at what point should you buy the distress is the question. We'll leave that to another day and get to the final headlines since we don't have enough time. ITC and United Spirits saw an uptick, a rather sharp uptick in trade today. This as the GST Council did not mention cigarettes or ENA, extra neutral alcohol tax, in their meetings held on Saturday. Both stocks were up over 4%. Mangalam is here to just decode why they rose so much, especially ITC. Mangalam.
Well, it was a good day at the markets, and ITC was the one which benefited in trade today, up about 4.5%, and led the Nifty higher also because it has about 5.5–6% weight on that index. Well, ITC rallied in trade today along with the other Sin Goods pack, the likes of United Spirits and Radico Khaitan. Deutsche Bank wrote a note this morning. They said that no mention of cigarette taxation on the GST on Saturday, the GST Council meet, as well as no mention of ENA taxation, extra neutral alcohol, that is, has led to further triggers for upside on both ITC as well as United Spirits. But while United Spirits and Radico Khaitan rallied on the back of no mention of ENA, remember, tobacco taxation wasn't even part of the GST Council meet agenda. So the up move there looks like a bit of the thing that was factored in already. So going forward, now the street will definitely be watching out for the future GST Council meets, and ahead of that, more importantly, they'll be watching out for what is on the agenda of those GST Council meets and whether tobacco taxation is a part of that or not. That is something we'll definitely watch out for. But today, United Spirits as well as Radico Khaitan rallied on account of no mention on ENA taxation, which was on the agenda, and there was no mention on cigarette taxation because it wasn't well on the agenda.
Mangalam, thanks very much. We have a question. Ravi Shankar has got ITC. He's bought for 500 shares. He's paid 264 a share for them. Been holding for the last 1 week. He's a short-term investor and wants to know whether he should hold or sell. I mean, the price is about 270 today. Ashwini?
See, this is a good year to have ITC because if we are going to underperform, generally, people will take a defensive positioning, and that may allow you to get a 20% style return. So you could get 295, 300. So this is the year when FMCG really shines along with the exporters like IT or metals, etc. Because domestic-oriented stocks, because of rates going up, may underperform.
Okay, just to go back to the previous question, Ashwini, you don't catch any of these falling knives, PSU banks?
See, you catch falling knives where it is a cyclical problem. I think the market is giving up on PSU banks. It hoped and it hoped and it hoped, and now finally it's throwing in the towel. And believe me, things can, as they can compound 1,000%, they can also come down in the same fashion. So you may again find BOI, if you are lucky, at 9 or 10 bucks. At those levels, maybe it's a good buy.
All right. Thank you very much, Ashwini and Deepan, for joining us. We wrap up this edition of Markets Today Talk Back. And we leave you with glimpses of the farmers' long march. Thousands of Maharashtra's farmers reached Mumbai and are seeking a complete loan waiver, among other demands. Here are the latest updates, and we'll keep getting more through the day.
Kisan Samaj Jindabad.